Markets head into the final trading day of the week with risk sentiment holding up remarkably well despite ongoing geopolitical uncertainty. The dominant macro theme remains the interaction between easing inflation pressures in the U.S., resilient global growth, and an increasingly fluid geopolitical backdrop centered on the Middle East. In FX, the dollar is mostly on the defensive after softer U.S. inflation data reinforced expectations that the Fed has scope to ease policy later this year. That said, downside momentum in the greenback has slowed as investors await clarity on U.S. Iran negotiations and broader geopolitical developments. A failure to secure a formal ceasefire extension could quickly revive safe haven demand for the dollar. The yen remains a major focus. Tokyo CPI surprised to the downside for a sixth consecutive month, complicating the Bank of Japan's tightening narrative just weeks ahead of the June meeting. However, stronger than expected industrial production and continued speculation around official intervention are preventing a more aggressive sell-off in the yen. Dollar yen remains highly sensitive to Ministry of Finance intervention data and any shift in BOJ pricing. Elsewhere, the New Zealand dollar is outperforming after the RBNZ delivered an unexpectedly hawkish message. Governor Bremen signaled that rates may need to rise sooner and by more than previously anticipated, pushing markets to reprice the path of New Zealand monetary policy. Turning to equities, U.S. indices continued to trade at or near record highs, supported by declining yields, AI-driven earnings momentum, and growing confidence that the U.S. economy can achieve a soft landing. Technology remains the leadership sector, with Dell's blowout earnings and major government contract reinforcing investor enthusiasm around the AI infrastructure theme. In commodities, oil remains primarily driven by Middle East headlines. Crude has eased from recent highs as markets price in the possibility of a 60-day extension to the U.S. Iran ceasefire framework, but the situation remains fragile and headline sensitive. Any setbacks in negotiations could quickly reintroduce a geopolitical risk premium into energy markets. Gold, meanwhile, is consolidating after the latest recovery from multi-session lows, balancing lower U.S. yields against a still elevated geopolitical backdrop. From a political perspective, investors continue to monitor U.S.-Iran negotiations, ongoing Russia-Ukraine tensions after a Russian drone strike crossed into Romanian territory, and the broader implications for NATO and European security. While markets have largely looked through these developments for now, geopolitical risk remains an important tail risk. That's all for now.